Are improvements made by tenants taxable income to the landlord? Generally speaking, if tenants make improvements to a property during their lease, the landlord typically doesn't have to consider those improvements as taxable income right away. The IRS usually views tenant-made enhancements as income only if they're specifically considered a substitute for rent or part of the lease agreement's rental arrangement. In other words, if the tenant's improvements directly offset their rent payments or were part of the lease terms, then yes, the landlord might have some taxable income to report. But if the tenants made improvements independently out of their own pocket and without it impacting their rent obligation, landlords typically wouldn't owe taxes on those improvements until they sell or otherwise dispose of the property. And at that point, it could potentially affect capital gains calculations. Of course, because every tax situation is a bit different, it's always a good idea to talk with an accountant or tax professional to clarify how your specific scenario might be treated.